Hello everybody, I'm making this video from a friend's house, so I don't have my microphone headset, so it's going to sound a little funny, but I'm going to make a quick video this weekend just looking at the overall market. Just to let you know, the NASDAQ 100 was the worst market on Friday. Pretty ugly sell-off, but as you can see, it's still well above the August and October and September really support levels. So it's kind of in a bounce zone. It's still just basically going nowhere. And with all the heavy volume that we're seeing, especially with the move on Friday, with the NASDAQ 100, we broke below Thursday's lows, erasing that rally attempt. But it's not really day one of a rally attempt despite closing higher than where we closed. But it's a good sign that once we broke those lows, the NASDAQ 100 was able to rally back into that intraday price range. And with the higher volume, it's probably indicative of a good bounce area overall. If we go look at the NASDAQ, you can see a similar situation. It's actually at the August and October support levels. So with it also breaking new lows and then rallying back into the Thursday price levels with the heavier volume, I would suspect that we probably have some overall, bounce zones ready to go on this one. But it's going to be choppy, sloppy, and ugly. So don't expect, I'm going to load up here on SPXL. And I'm just going to go all in. If you would do that, you'd want to use the Friday low a day, like a 61.72 to get out if you are wrong. But this is, an area where I would expect the market to bounce. S&P 500's also at those levels, broke to new lows and then snapped back and rallied to close barely within the intraday range. 1880, 1878 was low day. So, yeah, it was managed to do that barely. But the one slightly, so the good positive sign is, once again, you break the new lows and you just don't crater. You bounce right back into that, intraday range. So there's a slight positive for the bulls for the bounce. And the other positive is the Russell 2000. While every index was down over 2% on Friday, the RUT 2K was actually down only 1.75%. Nice intraday tail. And if you look at the Dow Jones Transportation Average, you can see that it was down 1.63%, even better than the Russell 2000. Extremely large volume and an intraday tail, break down to new lows, reverse back into the intraday price range. And whenever I look at some, transportation stocks like Rail, CPA First, Rail, ARII, oh man, I didn't write anything down and I'm here with no notes, so that's about all I can think of right now. But with transportation stocks kind of looking like, hey, maybe that's, look at Rail there, look at the pocket pivot point, look at CPA pocket pivot point. This might be a good level for them to bounce. Now, there's plenty of overhead resistance, so I'm not sure if this turns into anything, but we got decent setups here, and we've been in a long downtrend, and, the 50-200-day moving average has converged on each other, that we could start, possibly bottoming out, and who knows, maybe we've seen the lows. The Investors Intelligence Survey and AAII survey are extremely bearish. Put call got up to like 1.3, so, we're starting to see some signs that we're we're extreme, but remember, in 2008, we hit extreme bearishness levels and we kept that going into the 2009 lows. So it's not a gimme. We are in an interest rate hiking cycle, in an earnings decline cycle. So, I don't have a whole lot of, hope that this can turn into anything significant. I mean, the Russell 2000, clearly we're going to be having resistance, right around this level. So, I mean, until we even get back above there, it's hard to get too, happy about any kind of bounce. And even then, we got this resistance level, this resistance level, this resistance level, these resistance levels, not to mention the 50 and 200-day moving average psychological resistance levels. So, we're nowhere near, all clear zone, and we don't even have day one of a rally attempt so far, but it is what it is. For full sell, OA finally failed, and that's disappointing because after we went long OA, it actually did what back in the day before QE started was kind of a normal occurrence whenever I got a long signal. Like, I'm not used to swinging under 50%. Normally it was 60 to 70% win-loss ratio. Now we're happy if we do 30 to 40% on an end-of-day trend following basis, which is just insane. But OA worked immediately, so it looked like it was going to be a good one. But in a bad market, breakouts just suck. And OA, another victim, end-of-day basis, the full sell. And then BMA, technically, this would be it hit all my sell stops. My final sell stop was 55.93. They hunted that bastard out, and not surprising. But on an end-of-day basis, it's only a 50% sell because we're still above the 57.99 level. But if it closes below the 57.99 level, or not 57.99 level, what am I doing? 56.87 level, because it's the day before the first update after pocket pivot. So if it closes below the 56.87 level, and which will coincide with the close below the 50-day moving average. You won't need to wait for a close below 55.93 on an end-of-day basis. That'll be your full sell signal. But BMA, no matter what, if it trades below 55.30, I'd be completely out. I mean, you could already be 100% out of it because it looks like it's not going to work. But in this kind of market, a lot of stocks reverse. And then also AGROs at 50% sell signals. It's barely closing below the 50-day moving average. It would not have been a 50% sell if it would not have closed to a new low here. But unfortunately, back here, 1140 is the low. So 1135, 50-day moving average break in a weak market. Doesn't have green bop anymore, so I really don't feel like I'm going to get shaken out and care if I do. So that's also a 50% sell. And once again, I don't have my notes in front of me. There's another 100% sell, but it's a speculative name. Not a big deal. But, nothing's costing us a lot of money here, as all of our positions are tiny, as should be in this terrible market. But it's time to expect a bounce. Don't forget, we saw RCON, big mover intraday on the 12th. So these kind of plays, CRDB, or CDRB, on Friday, and then iCloud the 2 days before. Pre-market movers, you've got to check our pre-market watch list of stocks that are in play and a lot of day trading chat rooms full of degenerate gamblers. We put them together based on after hours news and what a lot of stocks that run strong or have topping signs on a daily basis into the close that are being mentioned in numerous different chat rooms that I monitor. But the pre-market watch list and the stocks right now, since we're still in January with the January effect, you've got to look for the pre-market biggest percent gainers in stocks under 10, preferably under 5. That's where you find these guys. Archon gapped up in the morning and continued to move throughout the day. That's where you make the money. A morning spike. iCloud, another morning spike. That's where you make the money. CDRB, another morning spike. That's where you make the money. 359 to almost 6. I mean, if you're not trading intraday, these small cap stocks, it's really hard to get alpha in this tape. End of day trend following still isn't working. And I want to remind everybody, the Russell 2000 from the June highs, is now down 22%. So, it's not a very happy tape out there. And I also follow like the AAII shadow stocks portfolio. For 2015, they were down 15%, and hedge funds had a horrible year, all around. So I prefer new traders to be in cash, but if you're not focusing on the intraday pre-market movers below $5, it's going to be hard to make money in this market. I continue to tell everybody, focus on that. We send it out every day. Check it out.